There it goes.
Good morning, everybody. Welcome to my daily plan. I'm Doc, and this is my SPX daily plan with some trading ideas for today, levels and lines, as well as some other macro and longer term trading ideas, investor general analysis of the market. If you find it useful, which I imagine you do because you're here, or if you just stumbled across me, click the subscribe link below. I think it's below, it's somewhere there. And like, retweet, repost, and do whatever the social media people tell me I'm supposed to ask you to do. Okay, let's get to the action. I wrote my plan 30 points ago when we were like over here at 5, 6 a.m., whatever time it was. And since then, we've gotten almost what I'm calling the trapdoor level. And I'm going to circle back to this in a minute. We'll do a quick overview of yesterday. I think right now we're mostly in the church, and what's happening now is where we pray. So we're going to get to our daily prayers in a moment. Okay, so quick overview of yesterday. And let's just do it. Okay, good enough. We'll do it this way. So yesterday we opened around 68.50, 69.50-ish, a little lower, and pretty much straight down through some gamma lines that were there. We don't have to go through what lines and how we went through them. Undercut went right down to what was the bottom of the chop zone yesterday, and then reclaimed as volatility came in and closed right above the 50 and 20-day moving averages. The 50 and 20 are converging right now. The old school TA folks. Right here, these two lines are converging. In theory, the 50 above the 20 is no bueno. And that's kind of where we are. If we just zoom out real quick, I'm going to do a little old school TA. You see that just, during the December sell-off, it never cut below. During all the sell-offs, the moving averages, not price, didn't cut below, except of course in April when nothing mattered. Okay, done with the TA lesson. So getting back to what happened yesterday. The thing I want to focus on is VIX 9-day, and all that stuff. So what happened yesterday? Early in the day, there was headlines about Iran that we walked out of the negotiations. The negotiations sucked, whatever it was, and VIX topped out around 22, a little higher. The VIX 9-day basically was at the same level, might have overshot it by a drop or not. But the TLDR, as the VIX 9-day, was up about 20% at that peak. The VIX was up around 10% at that peak. That's not supposed to happen. So that short-term fear, short-term market worrying about what's going to happen within the next 9 days, not what's going to happen in the next 9 months. We saw that here. And so I'm just saying that to say this, yes, we sold off maybe AI spend and all that other crap, but the fear in the market was about Iran and what's going to happen in the next week, not about private equity defaulting in 3 years. Just saying. But popular financial press, price makes headlines. That's a nice, easy headline to grab onto. I'm sure they said the Iran thing too. Anyway, so, and we saw IGV was green yesterday, despite that narrative that AI is eating IGV's, software is life. So anyway, that's what's going on in the vol space. And right now you see again, VIX is 21. The VIX futures are 20.6. So the VIX is not supposed to be, quote unquote, above the VIX futures. The VIX settles into this. It's keyed off of this pricing. So for now, I have to say bullshit on the VIX, unless we see the VIX futures tell us otherwise. VIX 9-day is what I'm going to be watching. Speaking of which, I don't have it up here, risk deck, so I'll just talk about it. So Scott Nations from Nations Index has his own set of indicators. You see I have skew dex, which is the one standard deviation out of the money, puts, standard protection, and T-dex, tail dex, which is the tail, the 3 standard deviation out of the money, the wingy, the cheap out of the money options. T-dex, where the hell is it? I'm going to PQRS. Looks like I have the wrong watch list up here. Oh yeah, it's the wrong watch list. Doesn't matter. I'm not going to worry about it. T-dex, which is a tail, and basically what the risk test shows, which is proprietary, you have to subscribe to him to get it. It shows the relationship of puts bought or sold and calls bought or sold, how he aggregates it. Now, long story short, it's at 7. The average is 3.5. It's at an extreme, roughly, I think maybe close to April. Calls being sold, puts being bought. That's a big risk signal. At the same time, when does that tilt? Soon. McMillan has a trade for a time like now where you buy, and I'm going to probably put it in, we're going to talk about it, where you buy, he likes to buy VIX call spreads. I like to buy VIX flies or ratios. Either way, you buy the VIX and then you buy SPY calls because they're cheap. And that way you make money kind of either way if you set it up right. And I'm going to be doing that with my subscribers. We're going to play with that. Anyway, because you're buying those cheap SPY calls and you're buying the in the money, at the money, or near the money VIX, locking in the VIX move. And it's kind of a hedge. Anyway, that may be a little bit too in the weeds. So let's get back to what's going on right here, right now. We'll go to options depth. So right now we're at, where are we? 68.40, right here. Which in my daily plan, we talked about if we break below this 68.70, 60 level, whatever it is, we go to 68.40. This is negative gamma. Market makers hedge in the direction of the move, so they're selling as we go down. Below 68.40, there's nothing there but a big ass magnet down at 6,800. Now, if you've been noticing, when I've been showing depth view, it just shows the same thing in a graphical chart rather than in bars, shows it just numerically. These 6,800s, where are they? Okay, this is, gotta update this. These 6,800 puts, this has been here all week. This has been here pretty much most of the month. So Customers have parked 6,800, now 6,795 puts, and they've been sitting there waiting for this. Now that could decay, and it still might, but that's a magnet pulling us down until something happens. If I was selling premium today, which I probably won't, I'd be looking down here. Here we have positive gamma, 67.75 if you want to be kind of a little more daring, 67.60. Non-investment advice, 67.50, 67.35, etc., etc. I may wait for a turn. Why? I'm not a geopolitical analyst. However, I think shit's going to pop, technical term, with Iran over the weekend. Yep, air pocket, exactly. Air pocket. And we're in the air pocket right now. So as my buddy Paul Duncan, the founder of Gamma Egg, says, don't torture the data. I can't make up a line that's not there. Below 6840, I have no reference point until 6800. That's it. So that's what I see going on. Not a pretty picture, folks. If you're a bull, if you're a bear, you're partying like it's 1999 until, and we've seen how this goes. We flip, and then we have all these price points up, price points down, and yeah, so that's the world we're in right now. Let's go back to here on my buddy's option desk, and I have a discount code. I don't know if it's in the whatever. It probably is. Let's take a look at the VIX. We've been talking about the VIX. So I'm going to switch it just to make it a little more intuitive for everybody to customers. So customers is you, me, and the hedge funds. And I'm just going to make it calls. So customers, you, me, and the hedge funds are long calls from 19 over 20. There's kind of a void. That's kind of why we get some funny stuff at 20. Customers sold calls at 22, 23. Well, what's going on here? They have spreads. They have fly kind of spreads. I always do flies. They have fly kind of spreads. Not always. And then there's the over 25 buyers and higher who are buying out of the money tail risk, and you have stuff even at 30, 40, 50. We could just open this up a little bit. Let's just say 36. Let's just make it a kind of extreme number, even though you'll see stuff all the way up at 50. So you see the wings board up here, the tail risk stuff. And so again, though, between 22 and 24 is this VIX chop zone. Got some stalling up here. Where we've been stalling at 22, 23. And you have this double strike here, 24, 25. And then over 25, it kind of gets sticky again. And so that's what we have for the March expiry. However, let's look at one more thing, because as I was watching the tape yesterday, I got to watch the flow to be in the know. There were buyers coming in yesterday at 19 and 20 calls for this coming Tuesday, this coming Wednesday. Buyers stepped up 10, 20,000, I forget the exact number, buying this stuff. And my boy Z Contrarian also put on a trade. He bought 19 or 20 and he sold 27, something like that. I'm looking at a trade. I looked at it yesterday. I didn't like the setup. I'll look for something today for the Iran war over the weekend that will probably be announced at 3 o'clock. Trump is meeting. I don't know. I could be 100% wrong. They could say, no, everything's fine. Me and the Ayatollah are great friends. We get along great. We have a great relationship. Could say that too. Who knows? So anyway, that's what's going on here in the VIX space. Now let's just go back to our, let's just do all just for fun. Let's go back to net. And since a lot of us, I know vol trade, a lot of us are used to thinking from the market maker hedging side. Let's look at the whole complex one more time. So here's the whole complex. If over 19, when you add up the math with the puts and the calls and everything else, there's a ladder from 19 to 22 where we've been stalling. Over 22 VIX, a little bit of a notch trying to stop it, but then we have a lot of interest at 25, and this is strong enough to overtake this. So should the market get really scary, 25 is probably where we top out. Depends how seriously the market takes this whole Iran thing, if it happens. So 30, I don't expect we get there. And so those are the numbers I'm looking at. I have some VIX trades I did a while back, actually, just for fun. Me and Val were talking about VIX trades, and then I'll bring my guests on. We have a whole panel here today. We were talking about a VIX trade when the SPX when VIX was in the 15, 16 area. Val did a 20, 25, I think, for March. I did a fly. So here's one for fun. So let's look at this. The fly I did a 20, 15, 20, 25. A real simple, nothing fancy, 5-wide fly. So what's green? The in the money calls, which were in the money at the time or near the money, and the 20 strike calls are actually green, even though we're above 20. Okay, so I do my VIX trades with flies for this reason. This here, by the way, is just a reference point for where the JP Morgan March collar is. I just kind of marked it with the cheap 3x2 fly. I didn't particularly do it to make money. It cost me $35, just a way for me to remember. So that's that. Who wants to go next? Bedamp, are you ready? If not, I'll bring my boy Val on.
Sure, I'm ready.
Okay, so I'll get my stuff off.
Let me pull my screen up for everybody. All right, everybody, let's start breaking out our range. I have a range of 69.15 down to 68.50. We're kind of already reacting from our bounce zone. So if you're into pre-market trades, now would be a pretty decent time to potentially take this all the way up to the pivot. We'll see how that reacts closer to the bell. But the trade I'm personally looking for is some more downside, all the way down to my 68.10 target down here.
Which happens to be 6,800 SPX.
Right. When did the contracts roll? Sometime in March, right?
Yeah. The roll is March weekly. The March OPEX, give or take, and so they're going to gradually collapse to equal.
Cool. So that's kind of what I'm seeing here. We're already kind of taking a bounce from my bounce zone. I think it'd be fun to take a reject from up here. I just don't know that we'll get up there. Like Doc says, there's a ton of interest at 24, 25 VIX, but I can't ignore the interest at 19.5, 18.5, and even 18. There's quite a bit of interest that I'm looking at. So that's kind of where I'm seeing if price is going to reject or push through based on what VIX is telling me at the time. I'm pretty bearish today, but yesterday I was pretty bullish and I saw the downside opportunity, was able to capitalize beautifully on that. Same plan today. If If for whatever reason buyers show up and we start to and sellers show up on the VIX, I'm really going to target the 69.70 up here. Unlikely, but I had no idea it was going to drop like that yesterday, and we were able to hold for a nice profit. Pretty simple game plan this morning.
Thanks. Val, you ready?
Yes, I am. Let me put it on the screen. I'm ready.
Where's your screen? Okay, after that, we have Dan here, so we'll make sure to leave time for Dan the man.
Oh, Dan. Wow, that's nice. Okay, so this was written at 5:30 Chicago, so this is like 2.5 hours ago. So first of all, after several messages I got on Discord, I would like to just say that the various models, without going into what exactly they are, one should consider them as of now just like lenses or filters, right? You change the lens and the filters, and you're looking at the same data, but you're extracting. Each lens is trained to notice different subtle insights. So each model is there to extract something, and the more models confluent and seeing the same patterns or the same indications, the stronger the signals are. So and I just give the various models names. Some make sense, some less, but all in all, I'm looking at the same data from different angles and trying to generate as much insight there is. So let's start with the plain vanilla open interest. We have 6,900, which is kind of like the transition zone for the 0DTE. We're pretty far away from it, almost 1% away from it. Statistically, when we are 1% or more away of transition pre-market, we tend to rotate and mean revert to the upside. And we'll see if the other models support this notion or not. Nothing special here in the expectation chart, which is the one that we generally see that it has a much higher peak either to the right or to the left. Here they just price, it's pretty random. So all these levels from 68.70 up to 68.25, they're pretty much the same. They have the same odds. And when that happens, generally the market is not quite, it's like there's a lot of conflicting views. Let's see if we can find them in the various models. So this model shows, tries to find inverted type of patterns. So where bearishness should be, it will find bullishness. Where bullishness is, it will find bearishness. And here you can see this inverted pattern.
And this is based on skew?
No, this is, well, everything goes through the skew, but this model specifically is trying to identify where you'll have the largest stop loss potentials.
Okay.
So in this case, 68.75 to the downside and 69.05 to the upside. Now, when I was looking at the model, this was 2.5 hours ago, the spot was around 68.85. So that 68.75 was like a trigger to the downside. But as of now, we already we did a low here, or what, 68.40, 68.35. So we can just
figure worked.
We can just go to the next slide. So this is the mean reversion model. So this and the skew are the most influential on what I do. And as you can see, the red line, which is the value of the model over the different strikes, is positive all the way down from 900 to any number under. When this happens, we generally get strong mean reverting dynamics. Now, specifically today, the mean reversion needs to occur around the 6850. If that fails, then the mean reversion will fail. The buy the dippers will take stop losses. The market could dump all the way down to 6800. And obviously, this is relevant to the real-time trading hours, right? To the session rather than to the electronic trading. Although we will see these levels come into effect even pre-market, but these levels are obviously referring to the actual session. And if we hold the 6850 for the session, like if eventually we reclaim this and it's pretty clear that it's generating some wicks to the downside into that when you start trading, the bounce will be pretty strong all the way back to 6900, even higher. I think Chewy also saw that. So we need to see how this works out. As of now, we're a bit stretched to the downside under 6850 on the SPX, but we'll see how the opening prices come in, and if we get buying or selling right off these levels, it will be a strong tell to support the notion that for some reason we will rotate to the upside. If on the other hand this fails and we get that selling opening, then we flush down 50 points pretty easy. 35, 50 points down. So we will just tag right off the open 6815 or 6800. We need to see how that works out when the market starts and be cognizant of that 6850. Now, if later in the day, if we flush down and later in the day we reclaim 6850, then we will get a drift 50 points higher back to 6900. I hope the 6850 holds because it will be pretty fun to see how this reverse and go against the whole logic and a lot of this bearishness in this VIX that is already higher than yesterday, even though the market happened before the market did the lower low versus yesterday. So next model here, the skew. Yesterday I showed you guys that there was complacency, so I was pretty bearish right off the open. Today there's actually fear and hedging. So today they're hedging heavily on the 6850. Clear fear. You have that hump. It's not flat. The skew is not flat. It's rising into 6850, and 6850 is like standing out versus the normal skew. So that's a clear signature of hedging. So they came pretty prepared for this down move pre-market. And again, we'll see how this level works out right off the open. Finally, the candy bar still has the same shape and patterns that we're seeing for the last 10 days. Cap to the upside, open to the downside. Other than yesterday, which for the first time was pretty balanced, so it was closed on both sides. This pattern is still indicative of continuous sell the rally. Right, we will see in the future when this flips, and we'll see this end, the put end being closed and the call end being open. We will see a market which are dominated by dip buyers. But as of now, every time you try to push up, even with Nvidia, they just slam it down. Right, and this pattern is consistent over the last 10 days. Now, I brought today the Q because for some reason I am getting like super bullish signals from the Q this morning. The data suggests the 0DT data is very bullish. Kind of strange. Puts me in an awkward position, but the model does what it's supposed to do. And from different angles and various models of the QQQ, which I follow every time, I just don't bring it up necessarily. But today, because it contradicts everything else and it's pretty bullish, they came ready for a rally to 615. So 615 is equivalent to, in terms of the NQ, it's equivalent to, let's say 615 times 41.1 or so. It's around 25,300. The QQQ right now is...
What percent is that from here? Like about a 1.5% from here?
The QQQ right now trading 24,880. So we're talking about 300 points higher. So more than 1%.
1%, 1 point, whatever, 1.2,
Yeah.
1.5. Okay.
So now I find it very strange. I think maybe they had a plan, and it went to the bin. Obviously, the Nasdaq is secondary to the SPX. For this to unfold, and I saw Chewy also thinking about upside. So it's kind of strange, right? I mean, we're seeing the price action clearly bearish. It's going down like pre-market, pretty harsh, but getting overextended into the open. So I do expect a bounce around the open, but I don't know if these bullish configurations will unfold in full. And we need to see that 6850 really prevailing and eventually, putting in that floor as the market struggles around it. And if that happens, then the bullish scenario is totally there. We will go back up 50 or maybe more points today for whatever reason. Maybe they're preparing some news or some other Fugazi shit. But under 6850, I am bearish and I am short SPX. That's pretty much it.
Okay, great. Thanks. I see Dan here, but it says not connected. Dan, oh, there we go. Add to stage. There we go. Hey, Dan, we have Dan the Man here visiting. Some of you know him from other Discord servers, from other podcasts, webcasts. Dan is one of my band of merry men. And so take it away, Dan.
Okay, hello everyone. I hope you can hear me. Not that much to add. You hear me? Can you hear me or not well? It's good? Okay. Otherwise, gotta leave the airports. Everything has been said about the spiders and the ES and then everything. So let's focus on some other stuff and the flow. One thing I was seeing was VXX call selling on the 30. I know, Paul, you believe we won't talk geopolitics, that there might be some Iran situation. I personally, from the data I looked at, and it's not data about options or the markets mainly, other stuff, we might not have an attack during Ramadan. That's why maybe there's little hedge unwinding. I might be very wrong about that, but if we have a melt up, be prepared to sell the volatility. Paul, if you want, you can add to that, or Paul, you both have maybe more experience than I do. Let's go back.
I actually started shorting a few shares of VXX, just 10, just to have a reference point in my mind for when I'm gonna short some shares and then go with options or whatever, and maybe do a coverage short, whatever, figure out how I want to play it. And no surprise, I'm not shy to say, I pretty much follow Z Contrarian on Twitter and kind of do a lot of trades similar to what he does. I tend to front run him a little bit. I tend to change my structure a little bit. But long story short, if he does follow Z Contrarian on Twitter, Z, and sometimes he gets a lot of crap because his stuff is a little risky, so you gotta know what you're doing. And dare I say, always made money for the last few years since I've been following him. Not investment advice, just sharing my experience. Go ahead, I'm sorry.
Yeah, he's amazing. Basically, he's doing a great job. He's been there, I don't know, 13 years, 14 years. So basically, if you follow him, follow Paul, and follow
Dan.
No, I don't know. Yeah, maybe follow me to my other unusual options trades and change in the positioning. I will post a report later for everyone to see, so you can take a look at. I will try to add a bit of other flavors in there. And you can ask me questions about them.
And this report will be in our Discord.
In the Discord, right? Yes. I will make it available to everyone. I've been a bit scarce lately, so let's go on. What else I was seeing in the flow mainly? I was seeing some GLD buying and some put selling on NEM. So this makes basically make some base case for basically some upside potential in the metals again. Many of you might have participated in the squeeze by selling basically how are you calling it? All your favorite put, cash secure puts. Don't do that, guys. Basically, no. This is just something you shouldn't do. If you do basically want to go long there, maybe do a vertical or some butterflies. Looking for the right target. There's a very cheap way to participate in this rally. Let's see what else I wrote down for you. Not that much. I will give you an overview of the market trends in the option flow. Let's look at AI and chip. Basically, we're still a bit bearish there. We had, I will put that in the report, 2.2 billion puts basically bought, and the premium was...
You're still on the VXX screen.
Yeah. This is basically we can take basically this is things I've written out, and the report is not ready yet.
Okay.
So the miners, as I said, bullish. I see some strength in the quantum. Let's take a look here at my own. Give me 1 second. I'm not as structured today as I am on other days. So let's take a look here. Let's take a look at the delta exposure. Basically, I see this as balanced, but we above the 40, and we might drift to the 45, but this should be it. We saw a lot of volume here on the 45 and selling on the 40. So this could make a base case, basically that we might go higher. But this is just some idea. I will put some stuff in. I would size this very small. Other things I saw was in cybersecurity. We saw some bearish movement down there, and it hasn't resolved totally. What else did I see on the cyclicals, especially basically
Any
ETN?
Any sectors catch your eye?
Yeah. Basically, the other sector which I was bullish on is basically industrials, and we can look at that basically a bit. I will put this in the report.
You used to have a relatively mechanical ETF straddle that you would sell, not totally mechanical because it's based on IVR, whatever. So I just kind of wanted to mention, are you still doing that?
Yeah. I'm doing all that stuff. Yeah, I'm doing all that stuff. So basically, we won't deep dive into the expected move, but the thing would be, and I will go into depth. Maybe we said we will make a special session here for you guys. Is like, how can you sell premium in all market conditions, and how can you basically create a little portfolio of ETFs where you either sell iron flies or guard with strangles, or if you're willing to do it and adjust accordingly with basically with straddles, and you have you look for confluence before you enter, and you adjust, and basically in the end you collect the theta, and you profit from a decline in volatility, but you don't do this in the highest IV regimes. So basically a lot of people will deep dive into that when the Z-score on the IV percentile is very high, basically, and hoping for more, or some of you people might use IV rank. Please don't, it's rubbish. I will explain into depth if you want another time, but the core idea would be on the long run to create something. But let's go back to the sector here. Take a look here at UNP. Maybe we can take a look at the volume here. A lot of unwinding here. The open interest was interesting here. if we look at the gamma wall 50 days out, we are above that. And the interesting thing is, this makes a very nice case here. Basically, if we are able to get the 270, we might go as high as 280. And if we crack that, there is no roof. And even if we go down, there's a lot of support here. And this would be something I would consider. Take a look at volatility. Is it high enough? And maybe sell something, or even do a
Interesting you mention that.
Yeah.
I was
Yeah.
looking at what is it, CNI, CNP, the Canadian. Let me find it. I was looking at the other rail, CNI. I was looking at
Yeah.
CNI to buy.
Mhm.
I haven't ordered in. I haven't clicked the send button yet. I don't know if you have CNI handy, but I'm just going to say that the rails are kind of going to be somewhat, they're going to move as a group.
Yeah. Depends what you want to do always. In the end, is you can go by the whole sector and either just go along with the sector, but basically I always, for each bullish position, if I take a direction, I would try to have some bearish position, but I will skew the whole portfolio or the parts of the portfolio according to what I see in the market. So if we are in grind up, but basically, like Paul referred to Z today, a good thing he had some nice little posts there. We can share that later. Basically, he explains why we're going nowhere in the end, and everyone has seen the choppiness. So you can make use of that. So you just either do some ratio spreads like he does, or you can do it with some strangles. You can adjust accordingly, and if you get the right proportion of ETFs to mix and flavor them, then you have a very robust and basic portfolio paying you theta every day, and you make profits from basically from the volatility side. We did some earnings this week, not that many. I suggested some. I didn't have much time to share, but I hope some of you banked on that. And it's a nice thing to do. I had a talk with Wall Trader here about that. Maybe we will talk again. And he gave me some good forward-thinking ideas, and I might be able to distill things even more and make things even better for you. So I think this is it from me, from the unusual options. I think everyone who's interested in that, I will post a report where you will see basically the market, basically where I would look into the market for bullish and bearish tilts. I always advise just skew things, just don't go full long, full short on the things. Look for the market dynamics, choose the right asset there, and I would try to add a bit of basically some walls and other stuff, if you might want to call them like that. So from the gamma landscape something, and from the volatility regime, so you can make basically some wiser choices there. I won't handpick you, take this trade or do this trade, because everyone trades differently. I think all users here are very experienced and very smart, and they will know what to do with that data. If you have questions, tag me, and I can help you sort things out.
Okay, and Dan is in our Discord, and click the subscribe button below. We have a free Discord server where you don't get much, but you get something. And we have the premium Discord for paid subscribers, where you're drinking from a fire hose. There's more information there than probably one person can use. So you have to find, like Dan said, you have to kind of pick and choose your niche, what you want. And of course, you have my commentaries and access to me. Speaking of access to me, and I've been talking about the beta course, the mentorship accelerator, taking you from what is it, put in a call, all the way to multi-leg strategies to different ideas about trading the VIX and how to look at volatility, more from the lens of a trader. I go through some of the Greek quantity stuff, but at the end, yeah, the theory is great, whatever, and it kind of informs us. But at the end, we want to know, okay, that's great, Doc. What button do I press and why? Where should I be looking? What should I be looking for to make the trade? You know, like I said, understanding the theory behind it certainly helps. But at the end of the day, it's going to be focused more on practical application. It's only through understanding and application that it works. And I've just noticed throughout my career, a lot of stuff is long on the understanding and the explaining, and then leaves you going, duh, what do I do when it comes to the application part, other than real vague stuff. So anyway, here's my boy Z. I put the link in there. Right now he's talking about, you know, the Iran thing and all that, and he just tends to be right. What can I say? He tends to be right. He has his VIX trade that he put in yesterday. This is the one I was mentioning. I looked at it. I just wasn't crazy about the setup. It was late in the day. I couldn't get it quite the way I wanted it. So I'm going to look at it today. But every time I second guess Z, guess what? He's going to be making money big time with this. And I'll be saying, oh, well, I missed this one. And so it's in there. I put that in there. Anyway, it's 9:17. And so I want to answer the question, why not sell puts? I'm not sure if you were talking about the index or the individual name that Dan was talking about. But long story short, I don't have to attend every knife fight that I'm invited to. And with volatility doing what it's doing right now, let's not look at that. Let's look at this. With volatility up here now, the market is still saying 20 VIX this next, the March expiry. But when we look at this week and the following week, there's still a lot of noise. There's still a potential Iran thing this week or next week. I don't know about the Ramadan thing. I don't think that. I mean, yes, it'll piss off the, some of our allies in the region, whatever. I think that's going to be window dressing piss off, personally. So yeah, and so we see VIX doing this. So I'm not selling puts yet until I see this. And some of you in the room might remember yesterday, I sold some put spreads for today and for Monday, and I closed them out yesterday. I didn't want to be walking into today and the weekend exposed to risk to the downside. I have some VIX flies like you saw there, and some other VIX flies, some of my patented Frankenstein flies, where I cobble together lots of different pieces. But yeah, so I'm waiting. I might screw around with some individual stocks now today, whatever. I might look for a SPY ratio of some sort with calls so cheap. Okay, we have a question. Dan, can you give us a quick glance why you mentioned IVR rank is rubbish? You give them the quick 2-minute TLDR. Are you still there, Dan? I see you there. I see Dan at the stage. Here we go. I see him, but I don't hear him. So we'll get back to you on that. We'll get back to you on why it's rubbish. And I'll tweet out his reply or whatever. I'll make sure that I'll try to remember to make sure that people get the answer. That's a good question.
Okay, Paul,
There
now
he
I
is.
think I can. Oh, now it works. It was frozen. Okay. The question was why I said it's rubbish. Okay. I don't want to be too harsh, but basically it only looks where IV sits in its 1 year range. It ignores realized volatility, which is basically a core of, at least for my trading. It ignores basically whether options are actually expensive versus the movement if you go deeper into it. And yeah, you just like Tasty and all the other ones which have get a lot of things right. But if you listen to Tom Sosnoff not only once, twice, but maybe 100 times, then you have understood that he's not saying, or Dr. Jim or all the other gurus, it's not rich versus cheap volatility. So I would prefer to make it short, but we can deep dive into that. And luckily we have Vol Trader here, and he can even digest these things better than I could ever do. I prefer VRP, which is IV, subtract the RV and you get your VRP. I also like normalized IV and the
That
z-scores
stands
of
for
that.
volatility risk premium,
Yes,
folks. That's the difference between realized volatility and applied volatility. What are you
yeah.
getting when you buy and sell volatility versus what actually happened?
So you would basically put
There he
the
is.
52-week, you would put the 52-week rank on the spread instead of the IV.
He just dropped out. I know he has some kind of VRP models that he runs. And guys are listening. If you like this kind of banter about RV versus IV and all this kind of crap, this goes on in our Discord in written form and verbally. Used to be verbally a lot more when it was kind of a little more freewheeling, and we could do some freewheeling discussions again. The Discord, the mic is open, so people can talk about it too. Now, oh, look at this shit. Pardon me. Okay, so now the VIX futures are starting to wake up. So let's just look in this whole recent run here. The VIX futures, since February, the whole recent run, this contract, the highest it's gotten is 21.5 so far. That's the highest it's gotten. Let's look at one more thing real quick.
Did you say the VIX is trading above the future?
Yep.
Which future? Expiring when? March?
Yeah. The March VIX is, yep. The one that it has to settle into.
Interesting.
Yep. No shit. It's been doing that a lot lately. It's been doing that a lot lately in the pre-market. I guess it has to do with lack of liquidity and hedging. Remember in August, we saw a crazy example of that. August, the Japan yen debacle, where we saw the pre-market, the VIX went to like 60 or something, and then came down to only 40, like right at the open, only quote unquote, and then quickly, came back to 30. I think it's liquidity driven in the pre-market. So yeah, what I wanted to show everybody real quick, and then I really got to go this time, is if we take a look in the chain here with VIX, let's look at March real quick. Let's find where the 50 delta is. 50 delta is right here, 21.5, just what I showed you before. That's where the market is. This is what the market is saying is at the money. This is at the money. Not what you see on your VIX screen. This is at the money compared to what? Compared to the VIX future, which this settles into. Now we have a whole, and I keep on adding to it, a whole module on understanding the VIX and trading it if you want. I traded a little bit. I guess no, the more and more I trade SPX and options in general and markets in general, the better I need to really understand volatility. That's why Vol Trader's name is Vol Trader, not whatever else. That's just kind of, again, that's just the way it is. All right, now I'm going to end. Once again, thank you for your attention, everybody. I know I've gone over again. Please click like, subscribe, check out the Substack, check out the mentorship class if you're interested. It's a beta. It's going to be written materials and discussion Q&A. There's existing subscribers, only $4.99. The course will eventually be probably $3,000. It's going to be combined with Bad Hombre's price action for futures. And I'm probably going to open it up for just 10 people total. If you're not a subscriber and you want $9.99, you get options Gelt for a year, and it gives my roadmap, all that stuff, and the access to the server and the beta course. I think $9.99 is a steal. That's at $100 a month. One good trade, and you paid for it. Or the money you save on one losing trade, even more important. Anyway, that's it. Thanks for paying attention. I'm Doc, and if you want to tighten up your game, subscribe. Thank you.
Bye-bye. Good luck. Bye-bye.